Last week, we broke down Zillow's forecast about a potential 2% dip in the house prices by the end of 2025. Now, Bankrate just released their own housing market outlook, and while some of this lines up with Zillow, there are a few angles that I think are worth talking about, especially when you layer in the latest data from the National Association of Realtors. So today, I'm going to walk you through what these market experts are seeing, and more importantly, what I think this means for you if you're looking to buy or sell this year. Let's start with mortgage rates because they continue to be a major factor holding this market back. So according to Bankrate, mortgage rates dropped as low as 6.2% in late 2024, but as of late April 2025, we're right back around the 6.86%. And according to Greg McBride, Bankrate's chief financial analyst, we're likely to see rates hold in the sixes for most of 2025, possibly with a brief spike over 7%, but not likely to fall below 6% this year. So if you're hoping that this would be the year of rate relief, that might not be in the cards. Now, Zillow was a bit more optimistic last month, but even that outlook has started to shift a bit here. And until we see rates drop more significantly, friends, this market is going to remain a bit tense. Now, let's shift lanes and talk about the elephant in the room, home prices. Now, NAR reports that in March 2025, the median existing home price hit $403,700, which is an all-time high for the month of March, and marks 21 straight months of year-over-year increases. Now, to be clear, that's down from the peak $426,900 in June 2024, but still significantly higher than March of last year. So while Zillow suggests that we could see a slight dip later this year, the market is still trending up, just not as aggressively. Selva, chief economist at Catality, told Bankwire that home price growth is expected to slow to around 2% this year, compared to 4.5% in 2024. So it's not a crash, it's more of a controlled cool down. So if you're hoping to see 2020 level discounts, well, that again probably is not going to happen. So here's some actual good news. The inventory is finally increasing. So according to National Association of Realtors, there were 1.33 million existing homes for sale at the end of March 2025, which is up 8.1% from February and up 19.8% compared to March of last year. Now that translates to 4-month supply of homes at the current sale pace, which is up from 3.2 months a year ago, but still it's below the 5.6 months needed for a balanced market. So yes, buyers have a bit more to choose from, but not enough to fully shift this into a buyer's market. And as NAR points out, most of the inventory growth is coming from actual new construction, not existing homes. You may be asking, why is that? Well, because a huge number of homeowners are sitting on 3% mortgage rates and they just don't want to trade that in for a 6.8% or more. So the lock-in effect is very much alive, and that's going to keep supply tight here for a while. Now here's something Zillow didn't cover much, but Bankrate did, the political wild card. Now with a Republican sweep of the White House, the Senate, and House, builder confidence has improved, or at least on paper. There's hope that regulatory burdens may ease, but on the other hand, tariffs on building materials are already driving up construction costs. In April, the National Association of Home Builders reported 29% of builders cut prices and 61% offered sales incentives to try and compete with the high rate of market. This morning, watching a video on the Florida real estate market, they were talking about new builders out there offering over $30,000 worth of incentives, again, just to get people to move in. So yeah, builders are active, but material costs and uncertainty around policy are making it hard for them to scale up in a big way. Now, both Zillow and Bankrate did agree on this. Real estate is local. And according to Bankrate, some markets are likely to see price gains while others may start to dip. Cities like Miami, Boston, and Denver are forecasted to continue climbing, while areas like Atlanta, Salt Lake City, which have seen large inventory increases, could see prices level off or even decline. So if you're buying or selling in 2025, you need to be tracking what's happening in your zip code, not the national numbers. In some markets, we may see real buyer leverage. In others, still a tough climb. So what's the bottom line? Well, mortgage rates are still high, inventory is improving, but not balanced, and prices are continuing to rise, though at a slower pace. Now for buyers, This means more opportunity, but not necessarily big discounts. For sellers, it means, well, you can still get strong offers, but you need to be realistic about your pricing. This is something we've been echoing on the channel here. And understand that buyers are way more price sensitive than they were back in 2021. And for everyone, it means timing the market is still tough. But being informed, being strategic makes all the difference. So let me know in the comments, what are you seeing in your local market? Are homes sitting longer? Are bidding wars still happening? I would love to hear what's happening in your area. All right, friends, and that is it. If you found this breakdown to be helpful, do me a favor, hit that like button down below. Not only does it help with the whole YouTube algorithm, but it also tells me that this is the type of content, the type of video that you find helpful, useful, and you want to see more of, so therefore I'm going to create more of that. And while you're down there, do consider hitting the subscribe button, so therefore you don't miss any future episodes that we may have. And one last thing, if you happen to be looking to buy or sell a home and you need some assistance, give me a shout. I'd love to help you out. I've called California home for the better part of 30 years. I'm a local real estate agent, and I can be reached at 949-726-2601. I'd love to work with you. That said, friends, I'm going to be shutting off the cameras, and I will see you in the next video.